Xi Jinping has promised to lower import tariffs and improve access to the Chinese market in remarks meant to portray his country as a champion of globalization as it remains locked in a trade war with the U.S. Protectionism and unilateralism is rising. Multilateralism and the free trade system are under threat. China will not close its door to the world and will only become more and more open, the Chinese president said on Monday at the beginning of a trade fair in Shanghai. The speech, ahead of a meeting between Xi and U.S. President Donald Trump at the end of the month on the sidelines of the G20 meeting in Argentina, signaled little improvement in trade ties before that meeting. Xi claimed China had entered a new round of high-level opening up but did not make any concrete concessions likely to satisfy the White House. The Chinese leader reiterated a pledge to enforce intellectual property rights, as well as open up the country's educational, cultural and telecommunications sectors, something officials have been promising for years, with little action taken. It seems largely more of the same, and unlikely to have any impact on the trade war, said Roland Raja, the director of the International Economy Program at the Lowy Institute in Sydney. The U.S. has accused China of unfair trade and business practices, including theft of U.S. intellectual property, and imposed tariffs on $250 billion in Chinese goods. China has retaliated with tariffs on $110 billion worth of U.S. goods. Without directly naming the U.S., Xi issued several veiled jabs at Trump, who has blamed China for the loss of jobs in the U.S. and a yawning trade imbalance. Xi said, all countries should strive to improve their own business environment and solve their own problems. As globalization deepens, the practices of law of jungle and winner-take-all are a dead end, he said. The Chinese economy is a sea, not a pond. Storms can overturn a pond, but never a sea. Xi promised to accelerate trade talks with the EU, as well as Japan and Korea. The president also said a new stock board would be set up in Shanghai for high-tech companies. Xi's remarks failed to lift spirits on Asia's bruised stock markets, which endured a grim October under the shadow of a possible trade war and rising U.S. interest rates. The Hang Seng Index was off more than 2.1% in Hong Kong, while the Shanghai Composite was down 1%. The yuan also fell slightly as the dollar firmed ahead of the U.S. midterm elections. Simon Rabinovich at @S_Rabinovich. But the point is that even with a horrendous 15 years, China would still hit the $40 TRN import goal. So either Xi has made a pledge that is effectively meaningless, or planners are deeply bearish about the economy's prospects. I think we know which one it is. And November 5, 2018. Amid the trade war, Chinese exports to the U.S. have remained resilient, causing its trade surplus with the U.S. to reach a record $31.05 billion in August. Xi said China would import $40 trillion worth of goods and services in the next 15 years, a figure that does not necessarily signal a meaningful increase given existing trends. Still, the Chinese economy has revealed signs of strain. China's economy in the third quarter grew at its weakest pace since the global financial crisis.